Hi, welcome to this SAP FICO training video. This video is for cost center accounting. Within cost center accounting, there is periodic allocations. This video is focusing on periodic allocations. Today's date is November 20th, 2024. And if these SAP FICO training videos are helping you on your SAP FICO training journey, please like, share, subscribe, and comment in the chat. Let me know how many years of SAP FICO training experience you have. As you all know, I like to format the information provided in a question answer format. And without delay, let's get into it. The agenda is accrual calculation, distribution, assessment, and activity allocation. Introduction questions. In controlling, how does costs often need to be reallocated from cost objects to cost objects? What is an example of cost reallocation? Administrative costs are posted to administrative cost centers, but administrative costs are reallocated to three separate sales departments. What is usually the reason what is usually the reason cost is reallocated? To provide an accurate profitability picture of the company based on lines of business and operations, thus creating real operating margins and profitability per product or service. Which area of accounting does periodic allocations take place in? Managerial accounting / controlling. What are the different types of periodic allocations? Accrual calculations, distributions, assessments, activity allocations. What are the two main methods to allocate costs out of cost centers? Distribution and assessment. That concludes the introduction questions. Now, let's focus on accrual calculation and periodic allocations for cost center accounting. Accrual calculation. What is accrual calculation? A process of evenly spreading out irregularly occurring costs over periods and distributing them by cause. Why isn't the accrual calculation procedure commonly used by companies? Most companies prefer to have the accrual posted in specific periods only. Where are accrual costs posted to before distribution? Cost centers or internal orders. What configuration activities are needed before accrual calculations can take place? Create a special accrual cost center, or create an accrual internal order and create the accrual internal order type. Menu path to create a special accrual cost center. Controlling, cost center accounting, actual postings, period end closing, accrual calculation, create accrual cost centers. Menu path to create an accrual internal order. Controlling, cost center accounting, actual postings, period end closing, accrual calculation, create accrual orders. Menu path to determine order types for accrual orders. Controlling, cost center accounting, actual postings, period end closing, accrual calculation, determine order types for accrual orders. This is where the order type is created. Order type creation will be discussed in detail in the internal order master data training video to soon follow. What are the two methods for accrual calculation? Target equals actual method, percentage method. What is the target equals actual method for accrual calculation? The planning of primary costs is made with an accrual cost element, and the system calculates and enters these costs in the actual value fields. When is the target equals actual method for accrual calculation used? When accrual can be planned periodically. What is the percentage method for accrual calculation? Specific percentages are used to calculate accruals. What does SAP provide to perform accrual calculation? Enhancement COOM, user exits for cost center accrual calculation that can be programmed to perform accrual calculation. That concludes accrual calculation. Now, let's cover distribution and periodic allocations for cost center accounting. Distribution. How does allocation work for distribution? Using the original cost elements posted to allocate cost to the sender cost centers, which allow you to see the original cost element posted from the sender cost center on the receiving cost center. What kind of costs is distribution used to allocate? Primary costs only. What configuration activities are needed for distribution and assessment? Define cycles, define segments. What is a cycle? A periodic allocation run which can contain one or more segments. What does a segment contain? Relationships between sender and receiver cost centers, as well as various control parameters. Let's create a distribution cycle. Menu path to create a distribution cycle. Controlling, cost center accounting, actual postings, period and closing, distribution, define distribution. Alternative menu path to create a distribution cycle. Accounting, controlling, cost center accounting, period and closing, current settings, define distribution. Here you enter a meaningful cycle name that will enable you to identify the purpose of the cycle and a start date, which is normally the beginning of the year, fiscal year. Each year you will define your cycles again, usually copying from cycles from the previous year. You can create a cycle with reference to an existing cycle. Execute to proceed to the next screen. This is the header of the cycle, which applies to all segments. Start date. You already specified the start date on the previous screen, but on this screen, you must also define an end date after which the cycle is no longer valid. If you create new cycles every year, this end date should be the end of the fiscal year. Text, a meaningful long description of the cycle. Iterative. This indicator enables iterative sender-receiver relationships. In this case, the iteration is repeated until each sender is fully credited. Cumulative. If you select this indicator, the sender amounts posted are allocated based on tracing factors, which are cumulated for all periods. Derive functional area. By checking this indicator, the functional area proposed in the cycle definition for the receiver is ignored and is derived again. Field groups. In general, only amounts in the controlling area currency are used in the periodic allocations. However, you can choose other types of currencies in this section. After maintaining the cycle definition, you will need to attach at least one segment. Click the Attach Segment button. The segment screen is organized into tabs. Let's walk through the tabs. Segment Header tab. Here you specify rules for the distribution calculation. Sender rule. This field determines how the sender values are calculated. The following options are available. They're available when you click this drop down list. Posted amounts. Amounts posted on the sender are the sender values. Fixed amounts. Define fixed amounts for senders in the Senders Value tab. Fixed rates. In the Senders Values tab, enter fixed prices for senders that get multiplied by the receiver tracing factors. Share in percentage. Determines the percentage of the sender values to be distributed. Actual values / plan values. Defines whether the cycle distributes actual values or plan values. Receiver rule. Determines how the receiver tracing factors are determined with the following options that you'll see when you click this drop down list. Variable portions. Receiver tracing factors automatically calculate the amounts to be distributed. Fixed amounts are distributed as specified under the Tracing Values tab. Fixed percentages, another option here. Define fixed percentages for receivers in the receiver tracing factor screen. The value from the sender is distributed to the receivers according to these percentages. Fixed portions, another option here. Define fixed portions for receivers in the receiver tracing factors, which is similar to the fixed percentage option, but the amount is not limited to 100. Variable portion type, another drop down list, determines the basis of distribution. Scale negative tracing factors, another drop down list, controls how negative tracing factors are treated. Negative tracing factors are possible when the tracing factors are not entered as fixed portions or percentages, but instead are derived. In the Senders Receivers tab, you will define the sender and receiver cost objects. The costs posted originally on the cost objects defined in the sender section will be distributed to the objects defined in the receiver section according to the tracing factors defined under the Receiving Tracing Factors tab. You also must specify the sender cost elements. In the Sender Values tab, you can specify the percentage of sender values to be distributed, which is usually 100%. You can specify if the origin of the values is actual or planned data. You can specify a version. In the Receiver Tracing Factor tab, you specify the settings that are transferred from the section Segment Header tab. In the Receiver Weighting Factors tab, the system shows the valid receivers found based on the parameters entered in the Sender Receivers tab. You can change the default factor for each receiver, which is 100%. The factor is used to multiply the determined amount. Be sure to save the cycle. The cycle is now ready for use as part of the period end closing procedures. Now, let's execute the distribution cycle. Menu path to execute distribution cycle. Accounting, controlling, cost center accounting, period end closing, single functions, allocations, distribution, or enter T code KSB5. This is the actual menu path in SAP to execute the distribution cycle. SAP menu, accounting, controlling, cost center accounting, period end closing, single functions, allocations, KS5, KSB5 distribution. Just like that. That concludes distribution. Now, let's cover assessment in periodic allocations for cost center account. What does assessment use to allocate costs? Secondary assessment cost elements with cost element 43, so that in the receiver cost center, the original cost element from the sender is not available. What kind of costs does assessment allocate? Both primary and secondary costs. Like distributions, what does assessments use? Cycles and segments. Let's create an assessment cycle. Menu path to create an assessment cycle. Controlling, cost center accounting, actual postings, period end closing, assessment, maintain assessment. Select create actual assessment. Alternative menu path to create assessment cycle. Accounting, controlling, cost center accounting, period end closing, current settings, define assessment. Enter a cycle name and start date. Cycle name and start date. You can create a cycle with reference to an existing cycle in the Copy From section. Click Execute to proceed. Start date and end date. Start and end dates defining the validity of the cycle. If you create new cycles each year, the end date should be the end date of the fiscal year. Text, a meaningful long description of the cycle. Iterative, this indicator enables iterative sender-receiver relationships. In this case, the iteration is repeated until each sender is fully credited. Cumulative, if you select this indicator, the sender amounts posted are allocated based on tracing factors, which are cumulated for all periods. Derive functional area. By selecting this indicator, the functional area proposed in the cycle definition for the receiver is ignored and is derived again. Field groups. In general, the only amounts in the controlling area currency are used in periodic allocations. However, you can choose other types of currencies in this section. Click the Attach Segment button. The segment is also organized into tabs. In the Segment Header tab, you specify the rules for the assessment calculation by maintaining the following fields. Segment Header tab. Assessment, cost element. This field is the key difference from distribution for assessments. Key difference between distribution and assessments is this guy. You must Specify either an assessment cost element in this field or an allocation structure in the next field, one or the other. Specified assessment cost elements are used to post the assessment instead of the original cost elements. Allocation structure. The allocation structure defines costs elements based on certain criteria and is used in various areas of controlling. We will configure allocation structures in a future training video. In this field, you can specify an allocation structure to determine the assessment cost elements based on the originally posted cost elements. Sender rule. This field determines how the sender values are calculated. The following options are available in this drop-down list. Posted amounts. Amounts posted to the sender are the sender values. Fixed amounts. Define fixed amounts for the senders in the selection criteria on the sender values. Fixed rates. In the sender values tab, enter prices, senders get multiplied by receiver tracing factors. Okay, share in percentages. Determine the percentage of the sender values to be distributed. Actual value origin / plan value origin defines whether the cycle allocates actual or planned values. Receiver rule determines how the receiver tracing factors are determined with the following options in this drop-down list. Variable portions. Receiver tracing factors automatically calculate the amounts to be assessed. Fixed amounts are assessed and specified in the tracing values tab. Fixed percentages. Define fixed percentages for receivers in the receiver tracing factor screen. The value from the sender is assessed to the receivers according to these percentages. Fixed portions. With this option, you'll define fixed portions for the receivers in the receiver tracing factor screen. This option is similar to the fixed percentage option, but the amount is not limited to 100. Variable portion type determines the basis of the assessment. Scale negative tracing factors controls how negative tracing factors are treated. Negative tracing factors are possible when the tracing factors are not entered as fixed portions or percentages, but instead are derived. In the Senders Receivers tab, you define the sender and receiver cost objects. The cost posted originally on the cost objects defined in the sender section will be distributed to the objects defined in the receiver section according to the tracing factors tab. You also specify the sender cost elements. In the sender values tab, you specify the percentages of the sender values to be distributed, which is usually 100%, as well as whether the origin of the values is actual or planned data. You also specify a version. In the receiver tracing factors tab, you specify settings which are transferred from the segment header tab. In the receiver weighting factors tab, the system shows the valid receivers found based on the parameters entered under the sender's receiver tab. You can change the default factor for each receiver, which is 100%. The factor is used to multiply the determined amount. After saving, your cycle is now ready for use as part of period end closing procedures. Now, let's execute the assessment cycle. Saving is here, if you didn't know. Menu path to execute assessment cycle. Accounting, controlling, cost center, accounting, period end closing, single functions, allocations, assessment, or entity code KSU5. This is the actual menu path to execute the assessment cycle. Accounting, controlling, cost center, accounting, period end closing, single functions, allocations, KSU5 assessment. Just like this. That concludes assessment. Now, for our final topic, let's cover activity allocation and periodic allocations for cost center accounting. Activity allocation. What is activity allocation used for? To allocate activity costs performed on cost centers. What are the two ways to perform activity allocation? Direct activity allocation, indirect activity allocation. Direct activity allocation was covered in the General Controlling and Cost Element Accounting Actual Postings training video. How does indirect activity allocation work? It allocates activity costs posted to a cost center and activity type using cycles and segments. Let's create a distribution cycle for activity allocation. Menu path to create a distribution cycle. Controlling, cost center accounting, actual postings, period end closing, activity allocation, indirect activity allocation, define indirect activity allocation. Select create actual indirect activity allocation. Setting up an activity allocation cycle is similar to setting up distribution and assessment cycles, so we won't go through every screen. Again, you define a name description, start and end date for the cycle. Then you'll attach segments, which have similar control fields as the cycles described earlier. However, you must specify a sender activity type in the sender section, as well as a cost center in both the sender and receiver sections. Cost center, as shown here. After maintaining these settings, you can execute the allocation with transaction KSC5. Menu path to execute activity allocation. Accounting, controlling, cost center, accounting, period end closing, single functions, indirect activity allocation. This is the actual menu path to execute indirect activity allocation, same as the last screen. Accounting, controlling, cost center, accounting, period end closing, single functions, allocations, indirect activity allocation. That concludes activity allocation and the training video. Thank you. And as always, if these SAP FICO training videos are helping you on your SAP FICO training journey, please like, share, subscribe, drop a comment in the chat. Let me know how many years of SAP FICO training experience you have. Thank you all for your time, and as always, peace.